Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 3:15 in New York. It is Wednesday, January 27th, 2016, and this is the Daily Report for Gold and Silver. Following statements made by the Federal Reserve as they concluded the most recent FOMC meeting, which happened just a few hours ago, we have a nice rally underway in gold, precious metals, pretty much across the board. First to gold, it is trading about $6, $7 higher on the day. We put out a trade alert. We'll go through that in a second, but current print is 1126 and change. Low has been 1115 and the high 1128. So we're just a couple dollars shy of the high on the day. So traders, as you recall, we first started talking about the setup for the current long trade that we're in on Friday, talking about specific parameters that we needed to see achieved prior to entering into a trade. The first effective thing that we needed to see, of course, was gold prices closing above 1100. And 1100, obviously a very, very key number, but then to actually take the call, our sense was that we really needed to see effective closes above 1110. And the reason for that was as follows. And the best illustration, of course, is to pull up this daily chart. When we take a look at different price points, first of all, 1100 coming right in here. And as this market came down, we definitely saw a series of days come in which this $1,100 was absolutely a resistance point. You can see that it made a stab for it on 3 occasions. You get highs coming into this particular area. Steve Nissan calls it a scouting party. In other words, the bulls are testing the fortitude of the bears as they move the price higher. And once we were really above 1100, what I wanted for real confirmation that we weren't just going to get whipped around in the market was to take out this effective top here, which comes in at 1110. That is where that number came from. It's these two tops that we have when we look at our daily chart. Now, that was Friday. We talked about a setup. On Monday, we actually stated in proper action as well as in the video, and that's why it's so important to watch the video on a daily basis, that we actually achieve those parameters, enter the market from the long side. Traders taking the call from the video got in roughly at 1111, 1112. Yesterday, we sent out an official trade alert stating that for any traders that did not take the call, now is the time to actually get in. Those traders got in roughly at 1116, 1117. Initially, we had our stops at 1097. The rationale for our stops in that particular price point was the knowledge that we could see some real volatility as the FOMC meeting concludes, regardless of what's said or not said, as traders react to these new data points and this new news coming out in the market. Now, the FOMC meeting has concluded. The volatility that we were expecting actually came in as we saw a nice rally to the upside, but now we can actually go ahead and tighten our stops. Today, I sent out a trade alert recommending that we raise our stops to below 1107, and I'll show you the rationale and why we picked that particular price point. But we also said to scale or add to your position. So if you had 2 contracts, you can add one to one you can absolutely do, but to add to the position. So traders taking that particular call, I'll have to see where the market was trading at, but it was certainly much lower than this. If memory serves me correct, it was 1119 to 1121. It was a fast market. Now, you can really see where this market at this point has taken off, and we are now near the highs of the day at 1128. And to show you the kind of volatility and range that we saw today as that announcement came out, I'm going to put up this particular chart right here, and this chart happens to be a 13-minute candlestick chart, so very short term. Now, first, let's talk about our stop. I had mentioned that you should move it under 1107. This is 1108 right in here, so 1107 comes in right below that, and the rationale behind that was This should be an area of support at this point, roughly 1108, 1109, 1110. That should be support. We also have this one bottom here that comes in at 1110. So those are points in which, if the market does begin to retrace and correct, this is where I would expect to find some sort of support. So by raising our stop up, we are protecting the equity within the trade. And then, of course, by adding to that position, as I said, you probably got in on your ad roughly in this area here, because this is where we put it on. But you can see the kind of spike that we saw just following the conclusion of the FOMC meeting, which takes us back to a chart that we have been looking at. In fact, this is the chart that I sent out with the trade alert yesterday. And the key to me was the fact that on a technical basis, my sense was we might see some sort of a breakout. And it was based really on trend analysis, both the 1110 area that we definitely spiked above, as well as this cascading bear channel line. And of course, if it trades within the channel, it's one thing. My sense was a real rally could not exist without breaking above this. In other words, if the market had come to this price point and began to trade lower, we certainly could make no case for a rally. The only thing we could say on a technical basis is really what we're looking at is a continuation of this market trading in a channel. And so that's why I put this out with gold is breaking above resistance, because that to me is the kind of bullish sentiment and the technical indications we absolutely want to and need to see to really look at a bullish model in this particular price point and in terms of what our goals are. Now, once again, let's talk about our exit strategy. Now, we'll work with trailing stops, so I always want to be able to maximize our upside potential, but it sounds good in words. In theory, it's a lot more difficult. As you well are aware of, it is a double-edged sword. And so my sense is that when we look at just basic levels of strong resistance, the 61% retracement level, that comes in at 1163. It's also harmonics off of a longer fib retracement. And so my sense is that this market, which is currently trading at 25 to 27, should have enough steam on this particular leg to take us up to roughly 1160. That's where I would look to exit the trade. From there, we'll have to see what kind of corrective wave we have. But I do believe that if in fact what we're looking at is the conclusion of an A wave, and we talked about this generic gold count for the last week, week and a half, and one of the reasons I'm so fascinated by this particular count is it actually looks at the potential that this tremendously long corrective season, year after year after year of declining prices, could in fact conclude. That is the good news. The bad news is that if we're in a B wave, we'll go anywhere between 50 to 75% that of A, but that will typically be followed by a final wave down, a C wave, that will typically make a lower low, or at least an equal low to the low we got in A. Now, all things being equal, if the scenario and data that was present when we went into our original bull count are still in the market, we will then restart the count with a 1, 2, 3, 4, 5 up and an ABC correction. However, we cannot make that case on a fundamental basis. Things have absolutely changed, and because of that, we'll have to see how it unfolds. But my sense is right now that I'm very, very curious as to whether or not we will break above this particular trend line, this diagonal that we've been in, a compression triangle, because once we do, and on a closing basis sustain that move, we can really make a strong case for this being a current A wave that has just concluded. Also, we have one fib retracement, call it 700 to 1900. 61% retracement comes in at 1146. So that's another point that I would like to see taken out on a closing basis. Maintain your current long position, maintain the add-on, and of course maintain your current stops at 1107. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday. Bye-bye.